I'm first time here, so thank you for inviting me, and thank you for this opportunity to share with you some topics regarding Russian bank insurance market. And thank you also for Jean-Pierre Daniel, who made a great introduction into bank assurance with some prehistory of bank assurance in Europe. So regarding the Russian bank assurance market, currently, based on the results of last year, it's really significant part of the market is 1/3, in fact, regarding 1/3 part of the whole insurance market. It's a big piece of pie, in fact, and it also goes with some source of it's a source of growth, source of complaints also, source of clients, and source of volumes in exchange for reduced profitability. As we observed, it's a driver for new products and also special point of focus for the regulator. So here's the overview of basic products that are currently on the bank assurance market. First group of products is linked with credit, the issuance of the loan. They are mostly dependent on the line of the business of the bank, and also the same way put together. For example, when there is a mortgage, it's usually life insurance and property insurance and title insurance, which is offered. Title insurance is the insurance of the risk of the loss of the titles on the property. In the after channel, usually life casca, third-party liability insurance and gap are proposed. And in point of sales, life and unemployment mainly. In cash loans, there is also life and unemployment. There are also standalone products which are sold together, offered together with mainly with credit-linked products, which is term life insurance, insurance for athletes who performs active activities, sport activities. There are also many box products such as box property for house and apartment, credit card insurance, and block of medical insurance products which looks critical illness, VMI, long-term care, telemedicine, and travel insurance. And also there is a separate block of savings and investment products, which are so, for example, savings, it's savings product based on underlying asset, which investment asset, and also provides full capital coverage. So the client never loses the money invested, and also may get some profit, but it is not a unit linked. Endowment product, the product which may be with investment, with profit, with fixed profit, and also with the profit which is linked to the profitability of insurance company. So they have the very similar name savings and endowment that to the products which are very well known in Europe, but they have some differences. There are also saving products which we call a unit linked, because there is very, very small insurance part and also big investment part, which is the part of under the investment risk, but it's more interesting for the clients who would like to get more profit. And also there is unit linked. Unit linked is not yet launched on the Russian market. It will be launched next year, and the law on unit linked was adopted this last year. So we're preparing for the start of this product. And there is also pension insurance, but it's very, very small number of contracts, because pension insurance is mostly about the pension funds. So here it is, how they split product share in banking channel by gross written premium. And you may observe that majority, so the biggest pieces of this pie are savings, endowment, and credit life. Very small portion of non-life products, which are CASK and TPL and financial risk and gaps, and usually offered together, just around 3%. And VMI is really mostly about critical illness, covering critical illness risk, is also very, very small. Property of individuals, mainly box products, has some significant share, and also some corporate business in the banking channel is not so much significant as life. So, and here is the conclusion, which is behind the chairs here. So most of the insurance products offered to banks are life insurance. And speaking about life in general, so we can observe how bancassurance impacted the appearance of bancassurance impacted life insurance. So bancassurance started in 2003, 2005. It just started to adopt the products for the banking channel. It started with credit life insurance. It wasn't like in the trends as we heard just right now about savings and investment insurance, but it was about credit linked insurance. And then the driver in 2012 has changed because investment life insurance, which we call savings, was invented. So the product which I explained to you just on the previous slide. And there is a really strong growth we observe until 2020, when after some implementation of regulations, the driver of life insurance has been changed to endowment. You also see really big growth on last year, 2023. This is due to various reasons. We think that this is the result of unreleased or uncompressed spring after the COVID period and other events. So then it is resulted, the potential of the market together with other economical reasons resulted in this big growth in last year, which looks to be really as an anomaly. And here is also evolution of products share in life insurance by gross written premium. So you may observe how it changed during based on the share. So first credit linked life insurance, then savings, and then in 2017 savings, and then big share of endowment last year. So, and there is also visible a serious decrease in classical life insurance, which is standalone products. But it's, so it's really hard to find such products currently in the market, which is also a result of impact of bancassurance. So here is briefly the life insurance achievements of last year, which are mostly thanks to bank insurance mainly. If we will look at the life insurance, we'll see that it is 35% of the whole insurance market, and the serious growth of last year, which I explained to you previously. We also have even 2 new life insurance companies in the market, which appeared this year. Totally, we have 20 million active policies, which represent 37 million clients covered under the protection of life insurance products. And life insurance is more popular than other non-banking products in the banking channel, I'd say so far. It's so good. And still, based on the economical assumptions of some experts, there is still some growth for the life insurance because the penetration of life insurance remains low, so around less than 0.5% of the GDP. And next slide looks like this. No? No, next slide doesn't work. So next slide looks to be overloaded. I would agree. I will be very simple. I will try to not spend a lot of time on this slide. So promising figures. Figures, as you saw in the previous slide, are very good, very promising, and bank insurance usually comes with mis-selling. This is like a bundle offer. You cannot, so you should solve these things. The mis-selling. So the slide represents maybe the timeline from 2014 until now, next year. And each pin on this timeline represents the new regulation, very briefly. Very briefly, in link, which is aimed especially on mis-selling. So just key points I just made in larger font here. So first it was started with very simple thing, right? The agent, for example, bank is not allowed to be beneficiary and to sign agreements. Afterwards, the life insurers found the solution. Then it was pre-look activity. Pre-look started with 5 working days in 2016. Then it was extended to 14 days in 2 years after. Then pre-look for group insurance agreements wasn't entered because that was not covered area, and the regulator realized that. And together was the initiative of early repayment of premium refund in case of early repayment of the loan, but only for credit life insurance products. Then free look for 14 days for non-insurance products, for all non-insurance products, because after the regulation of credit-linked insurance products, banks started to sell non-insurance products with very low value for the client. And then free look for non-insurance products was introduced in 2021, also for 14 days to avoid any arbitration between insurance and non-insurance products. Then for investment and life insurance products, 30 days free look, and also afterwards early repayment for the all life products, and afterwards for all insurance products sold at the very same moment when the loan is issued. So the idea was somehow to the further idea is somehow to split the moment of issuance of the loan and the issuance of insurance. So it seems to be that may become boring. So we may say that welcome call incoming, informing clients, memo, income disclosure, client self-assessment. What else there? Testing of the client who is purchasing saving and investment products, which is coming next year, which will be introduced at the end of this year. And then unit linked instead of savings product, which will be launched next year. So and also product governance recommendations issued last year. So there are a lot of things. They mostly remind maybe IDD and MiFID II regulations, but not fully, and also with some specifics. And also you may observe that the pace of this growing market and the pace of the regulator to issues dedicated regulations is also quite tense. You should also notice that All Russian Insurance Association is a self-regulated organization. It also will have issued at least 3 standards on this topic. first one, which is interesting, was introduced by the market itself. It was from the bottom up, and next two were mostly from the top to the bottom. So, okay, so there's one interesting topic, how the credit-linked insurance is sold, about the access of the insurer to the bank insurance and the client to this insurer. Normally, there is a previous practice was that each bank had a list of accredited insurance companies, and the client could normally select only from these companies, the insurer. He could also bring the policy of another insurance company, but then he had to, nearly with all banks, to pass the full procedure of accreditation with this insurance company. It was very complicated. Then, in order to split this dependency for the client and make the market more free, a new regulation was introduced since September last year, and policy of any insurance company with the credit rating of A- and higher should be accepted by the bank regardless of accreditation. Then there is a question if did this regulation work for the client, and did it help to decrease the price of the policy, because that was the aim, to better protect clients. And how many clients use this option? So in fact, so the number of clients which are using this option is very, very low, but this possibility is absolutely, I would say, practical, realistic. And this is the surprise that we observed. Our observations, sorry, regarding time, do you have a little bit some time? Or okay, last slide then, last slide. Observations. So the power of the bank's brand makes client blind, especially for the investment and savings products. Client doesn't read documents. So whatever simple they are, key information documents or whatever, then what is said becomes more important than what is done or signed. And also, as we previously observed in the previous slide, client prefers service like something like single window instead of the price. Then mystery shopping seems to be one of the efficient tools, maybe nearly the only one. And disclosure of commission price of insurance nearly did not impact the sales. That was also introduced together with other regulations that I showed you. And also, if we observe that if insurance becomes less profitable for the bank than it was the case when there's the early repayment of the loan, refund in case of early repayment of the loan appeared on the horizon, it is easily replaced by products, services, which is very low value for the client. So, thank you for your attention. There is one more slide. If it will be interesting about unit link, what it is, you will be able to see the presentation. Thank you.
Thank you very much. So, well, I just have a very, very short question because we don't have time. In other markets in the CE, it was at start a very positive evolution, apparently positive evolution in bancassurance for life insurance, mostly because these products were used as a tax optimization method. I know it was also in Russia at some time. And after the regulation were changed and this thing was no longer possible, the markets came down to their real value, in fact. Would you say that now is life insurance distributed by banks is maybe more successful than simple deposits in banks?
Yes, this is, I would say, one of the reasons, because the taxation is a little bit more interesting and also the product itself a little bit more interesting. But it unfortunately might change just this or next month, I guess, maybe, or maybe it for sure this year. This might change, and life insurance may become the less attractive product from the point of view of taxation, unfortunately, which is absolutely strange, taking into account the experience from the whole world, Europe especially.